Good morning, Steve Reed with the Morning Grain Comments. Well, prices are lower overnight. There was some unexpected rains in Iowa, and then the 2-week forecast now is wetter than we thought yesterday. In looking at the three models, the GFS model is the wettest. The Canadian model has some scattered showers in the next 2 weeks across the Midwest, maybe favoring parts of Iowa, southern Wisconsin, northern Illinois, and then get down into the Ohio River Valley. And the European model is probably the driest, but still it looks like cold air will move out of Canada into the Midwest. As it moves and meets the hot air, it will provide showers, especially Iowa, Illinois, Indiana, Ohio, and the Ohio River Valley. In the second week of the forecast, this cold air moves back to the north and again will allow showers in the same areas. I think the areas that will miss out on the rain is the Dakotas and maybe western Minnesota and maybe western Iowa, and then we'll see how much rain Nebraska gets. Crop ratings are expected to continue to drop on Monday because of the dry and warm weather this week, but the ratings might start improving, especially in the eastern corn belt after this rain event. Our weather guy still thinks that for the most part, July will be warm and dry for the Midwest, especially in the western Midwest and northern plains. So I don't know if we necessarily have seen the top of the marketplace, but maybe we go back and test $15 beans in the nearby, 14 in the November, and maybe the $6.75, $6.80 in nearby corn, and maybe $6 in D's corn. But at that point, I would think U.S. farmers will become aggressive sellers, especially where the crops are the best. Still worried about the U.S. hard red spring and crops in the northern plains, and also the Canadian wheat crop this year. We also will be watching pretty closely Russia. It looks like over the next 2 weeks, they will have this Shukove, which is very windy and very hot temperatures that could stress the crops there. Export sales numbers are supposed to be on the light side, for all three, somewhere between 100 and 500,000 tons. We really haven't seen the Chinese in the marketplace over the last week or so. We also note that the Chinese have ordered their traders to take out positions in commodities. Most of that is probably in the precious metals like gold and copper, but we do not see any signs of them taking out positions if they have them in corn or soybeans. We also note that, again, Brazil is running tight on corn supplies, and they may have to import corn, which should help U.S. balance sheet. All in all, I think that the USDA is still too low in the corn export for this year and next year, and the same thing for the beans. And so I think the carryouts get tighter, but I think it's all up now to weather. And if we get this 179 corn or 51 bean yield or something less, that makes things even tighter. Yesterday's hawkish Fed comments has the gold sharply lower. It's got the dollar sharply higher, and stocks are on the defensive. So we'll have to see at what point in time does the Fed think they need to taper. They want a lot more data on jobs. They want a lot more data on inflation before they start tapering. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.